Hey everyone, in today's video I'm gonna talk about something really exciting. I've been thinking about this for a very long time. Property versus stock market, and particularly options trading. As you know, I'm an options trader. I don't normally trade stocks. That's not my area of expertise. Every time I pick a stock, it normally goes down, and I don't like that. That's a 50-50 game. Either goes up or goes down. Now with options, we have a significantly greater chance of winning, if I can put it that way. You select your probability, and that's how you can profit in options. With options, depending on how much risk you want to take, you either go with an option strategy that's a little bit more risky but offers you greater return, or you go, if you don't like to take great risks, then you can go with option trades that have a higher probability of succeeding, but of course, you know, the return is going to be a little bit less. Now, I am also a property developer and property investor. I've got a portfolio, and what I wanted to do is I wanted to test what happens if I, instead of having a significant amount of cash sitting in a property and basically enjoying the rental income from that particular property, I wanted to see what happens if I sell that property and take the cash into the stock market and start trading options with it. So I set up an account particularly for this, and I wanted to run it for a year before I created this video, because of course, you know, the market fluctuates, and my account, as you will see it later on, always goes up and down, and the fluctuation is far greater than the market fluctuation itself because of the nature of stock options. So I had this property. It was an old property. I built a granny flat in the background, so I enjoyed dual income from this property. So I would say the yield was okay. It was much better than what's standard here in Australia, but still I wasn't happy about it, because I was thinking, okay, well, these two rental incomes, they generate X amount of money every single year. But from that, I need to pay insurance, I need to pay property managers, I need to pay maintenance and taxes. So you add all of that up, and you realize that your return is actually not so great. Of course, on the flip side, the property values tend to go up over time. You know, of course, it fluctuates like the stock market, but if you look at the longer term horizon, then property values tend to go up, at least following the inflation. But in Australia particularly, they tend to go up higher or faster than inflation. So I had to factor that in as well. So it's not just the rental income that I was getting, but also the asset growth that I enjoyed through the property value increase. So taking these two, I guess, income factors or wealth growth factors into consideration, I was thinking that I think I can beat that. I think I can beat that trading options, stock options in the US market. And so I wanted to give it a go. I must say I was very hesitant to do this, because we're talking about larger amount of cash in here. I can buy a property from it pretty much cash. So it's an amount that I never traded with, because as a property developer, when I have larger amounts of cash available to me, then I tend to develop properties from it, or put it into property. Options trading has never been the main focus, the main source of wealth creation for me. But it took my wife to encourage me Um, and the line that she told me was that you will never know if you're gonna succeed if you never give it a try. So I was like, that is so true. You don't know your potential. You don't know what you are capable of until you give it a try. And this applies to anything in life. You know, it could be, let's say you wanna start swimming and you wanna become a champion in your local area. Then if you don't give it a try, you will never find out whether you would become a champion. Um, and like I said, it applies to anything in life. But before I show you the results, I also wanted to mention something very intriguing, very exciting. So in my previous video, I mentioned that I wrote a couple of books. So this is a series. It's called Teeth of the Jungle, and it's written mostly for the young adults, so 10 plus. Probably I would say the primary core target audience is more around the 14 years of age, and the parents. Now, why do I mention? I mean, this is very not just parents, sorry, adults. These are very distinct groups, right? On the one hand, you have the adults. On the other hand, you have the young audience. So why would I claim that I wrote a book that tailors or caters for both target audiences? Well, it's because it's an adventure book. It's a jungle adventure book, and it's packed with life lessons. It's packed with financial education and personal development. And so if an adult picks it up, then they are going to read it. They will understand the messages, the underlying messages that I was trying to convey through my stories. While if let's say a 10-year-old picks it up, they will read it as an adventure book. And hopefully it will also start playing in the back of their mind that some of the messages will resonate with them, and as they go through the teenagehood, those messages will stick, and hopefully it will help them to become more balanced adults, and help them to see the world slightly differently, and ultimately help them to become entrepreneurs, or to become just generally successful financially speaking. So this is part one, and yes, I'm very excited about this. I sold quite a few copies already in the first couple of weeks, and so far the feedback is really good. So I encourage you to grab a copy for yourself. If you're not a reader, then grab a copy for somebody that you care about, especially a teenager, because this world is full of trouble, and the trouble that we're experiencing is quite often related to the financial difficulties that we're all facing. So I'm really hoping that through my Teeth of the Jungle series, I can contribute to a better life, to a better world, and yes, so I do encourage you to look up the book, look up my website. There's more information about it, and yeah, I'm quite certain that you will find it intriguing. So now let's take a look at the outcome of year one passive property investing versus stock option trading. So before I get into talking about the results, let's revisit what options are. So options basically allow you to buy or sell stocks at a given price during a particular time frame, depending on whether it's a put option or a call option. I have plenty of videos explaining the difference between the two and the various strategies. My favorite strategy is called strangle, where I basically sell a call option and a put option a little bit away from the actual price. So let's assume over here we got the blue line, and that's the stock price, and then on the green line indicates my option positions. And as the stock fluctuates, my objective is to make sure that the stock price remains between my call option and my put option. So of course I can't control where the stock price goes, but I can control where my call option and my put option positions are. So in this instance, if let's say the stock market goes up, or this particular stock goes up, then I would need to make an adjustment. I need to push the call option up and the put option up as well. I've got videos explaining this. Is called rolling, and it's a beautiful way of generating income month in, month out. So yeah, I encourage you to watch my other videos where I explain this in more detail. So let's take a look at SPY versus me, and I also have the VIX on this particular chart. Now the VIX is very important. It measures the volatility of the market overall. So normally if the VIX is between 15 and 18, that's quite standard, or more like 16 and 18, that's the normal range. And then if it goes below the 15 mark, then the market is very calm. And as an option trader, that's when it's actually quite risky. When the market is in turmoil, and let's say the market is going down at a rapid pace, or some critical geopolitical event is disturbing the calmness of the market, then the VIX tends to go up. So once it goes up north of 25, then we can say that the market is quite volatile, and that's when you can sell options at a higher price, and you can stay further away from the actual stock price. So it allows you to collect more premium for your money. I mean, for the risk that you are taking, and therefore generate more income. So I started trading, or I started trading with the money that I received for this particular property that I mentioned previously at the end of January, on the very last day of January 2024. And as you can see, in the first month, in the month of April, not much really happened. The red line shows me, and the blue line is the market. And it's actually quite interesting how I'm not doing as well as the market. The market keeps going up, but I'm kind of hovering around the 0% mark. But that's okay, because it can take some time. Now the VIX at that point was around just under 15%. Sorry, 15 on. Well, the index was under 15. It's not a dollar, it's not a percentage, it's just an index figure. So moving on, month 2, in the month of March, the stock market kept going up, and finally I started to see some growth in my account as well, and that's because the VIX started to come down. So when you sell options, when the VIX is higher, obviously you get more premium. So as the VIX goes down, the value of those options diminish, so you can buy them back at a cheaper price, and that's how you can profit. Now, I normally just have, because I trade strangles, I just have these positions going on for extended period of time, and I just keep rolling from one month to the other. Now, in month 1, 2, 3. In month 3, that's when we started to see some movement, some bigger movement in the market. So the VIX went up. Still, it's not high, it's still under 20. But what happened is the stock market dipped. And because the VIX jumped up, my positions, my portfolio went down. In fact, it went into negative territory. So at that point, I wasn't stressed about it. This is only month 3, and my return was negative. But it wasn't really bad. So I wasn't overly stressed about it. And then as we bounced back, the my portfolio bounced back very quickly, and so did the market. And then month 4, I'm kind of following the same trend as the market, so nothing overly exciting to report in here. And then this is where things start to get a little bit interesting. In the month of June, that's where the market keeps going up. The VIX stays around the same price. We can see over here the green, that's the VIX. It kind of stays around the 13, and the market just keeps going up, and my portfolio goes down. So I was like, okay, let's take a look at what's going on in here. So this is where you can see it. So it's a screenshot that I took from Yahoo. So ignore all that information on the top. These are relevant information as of today, as of yesterday when I took the screenshots. So ignore all of that. What matters in here is this is June 2024. You can see that this is the SPY, which is the S&P 500. So you can see that the price just went in the month of June from, in fact, let's go back to month of May. It went from 500 all the way to 550. So it's a 10% increase in a matter of 1.5 months. That is insane. So what happened is at that time, I had the 540 call option and I had the 505 put option. So I was a fair bit away from the actual price. But because the price just SPY kept going up, my position on the call side was heavily tested, and that's why my portfolio suffered. The call option lost significant value, so I was trying to balance it out by moving up my put option. So as you can see, I had the 505 and then moved up a couple of times. So when I say moving up, that means let's say I sold the 505 put option and then I bought it back at a cheaper price, and then I sold, let's say, the 510, and then I bought it back for a cheaper price. So every single time I did this roll, I collected additional premium. So on the put side, I was winning heavily, but on the call side, I was losing more rapidly than the growth that I enjoyed through the put side. And let's take a look at QQQ, which is the nasdaq. You can see exactly the same story. Nasdaq went from 425 all the way up to roughly about 485-ish. So once again, it's a tremendous increase in a matter of 1.5 months. So of course, as an option trader, I couldn't keep up with that. All I could do is just roll my put position. As I learned from experts, you manage your winners, and the losers eventually they will turn into winners. You will see this later on. So let's take a look at what happened IWM. So these are the 3 main indexes that I'm trading options on. IWM, QQQ, and SPY. So IWM during the month of June didn't do much, so it stayed at an acceptable range. So I could actually shrink my position. So I went from 215, 188 to roughly about 190. and down to 210 on the call side. So I was able to get closer to the actual share price and collect additional premium on the way. So let's move on to the next month. In the month of July, now this is where my account really suffered. So as you can see, I was 6 months into my trading, and my account was producing a negative over 9%. And at that point, I started to have some questions. Oh, was this really a good decision to sell a property that was generating passive income without me doing anything whatsoever? And now I'm risking all that money and losing it. So of course, this was a challenging period, but I trusted my skills. I trusted that the strategy that I've been doing works, and I just needed to stick with it. So I stuck with it. I've been trading options for about 9 years, so uh, I, I'm kind of familiar with this feeling of my account going down. Um, and you can see over here that the blue line shows the SPY, and it just kept going up and up and up. And at the same time, the VIX also started going up. So that was a double negative for my account. So let's take a closer look. Over here, I showed in the previous month of June, the SPY went up quite a fair bit, and then we experienced exactly the same growth in the month of July, at least in the first half. So this red line over here indicates my call position. As you can see, I was heavily in the negative, $550 strike price, but the market was already up at about 565, 568. So when you have a larger amount of money sitting in these call options, then that's a massive strain on your portfolio. So the balancing that I was able to achieve by rolling up my put side couldn't offset that negative on the call side. So as a result, my account suffered greatly. Now let's take a look at the QQQ, exactly the same situation. I don't need to explain this further. So it was quite a challenging period. But if you look at QQQ, and also we could see it on the SPY as well, but not as prominently. Uh, it went up from from May 425, in fact probably closer to like 420, all the way to north of 500. That's a growth that you don't normally see. When you see a growth like that, that's insane. That's when you gotta be scared. So if you're a stock trader and you experience a growth like that, you better sell at that point. So, and that's exactly what happened. Immediately after that, bang, a big correction came in, and as you can see, I could have, when my call side was heavily tested, I could have sold or rolled up my put side more aggressively, but I had a feeling that at some point there is going to be a correction, because this is not a sustainable growth. Like this was on during the AI boom, Nvidia particularly, and so I knew that this is not sustainable. At some point, QQQ will have to come down. So I didn't roll my put very aggressively. I stopped at 460 and then rolled to the next month. So I was able to roll down my put option as well as my call option. So the QQQ stayed between my call and my put side. Let's take a look at what happened with IWM. So IWM experienced a very sharp increase during the month of July. You can see that I was very far from the put side, because I'm generally quite bearish on the market. So I tend to be more cautious on the put side, and I tend to be further away. So in this instance, my put was quite far. My call side was very far as well. But then this increase over here, which took place in a matter of 1 or 2 weeks, of course, I couldn't defend that. So on my call side, I was losing once again quite heavily. You can see that I started in here with my put, and then couple of in a few days I needed to roll it a few times, and then had to roll it 2 more times, big rolls from 190 to 200 to 210. These are big adjustments. Normally, when it comes to IWM, the adjustments that I make, they're normally about $3, 3, 4, max $5, not $10 in one hit. That's a massive adjustment. So let's continue. We're going on to the month of August. Look at that. My account was down more than 20%. And at that point, I was like, ooh, this is not looking good. My strategy works. I know it works, but the market is doing something weird. And you can see that the market dropped quite substantially. This took place in the beginning of August. I can't remember the exact date. And you can see that the VIX jumped up to almost 40. So those who are familiar with the stock market, they remember this day very well. It was I think it only lasted one day or maybe 2 days, and the market recovered. As you can see, it was a very sharp recovery. So once again, when you experience something like this, the stock market drops significantly, very sharply, and then increases significantly. And so this is like a V recovery. And at the same time, you have a massive increase in the VIX. As an option trader, you will suffer. There's no other way to put it. You will suffer. And you can see my account suffered greatly. I was down more than 20%. In fact, unfortunately, the trading firm that I'm using for this particular account is Interactive Brokers, and Interactive Brokers can close your positions at will when they see that there's too much risk in the market, and this can happen during the day, anytime. So because I'm in Australia, the U.S. market obviously operates when I'm asleep. So I wake up and some of my positions are already closed and at a massive loss, and there's nothing I can do. So that's exactly what happened. I lost a lot of money on that particular day because Interactive Brokers have this policy. Other firms like Tastytrade, they don't have this policy. They close positions, I believe, in the last 15 minutes of the trading day, which makes a lot of sense because it gives you the opportunity to make adjustments to your positions. It makes no sense to me why Interactive Broker does uh, um, close positions, at will, basically anytime, and for those who are sleeping during the trading hours, this can really hurt us. So that's exactly what happened. I lost a ton of money in here, and yeah, so I had to work my way up. Now let's take a look at what happened. So SPY, we already discussed this sharp V recovery. So you can see my adjustments. So the call option, I needed to move it up. My put option was a fair bit away, but because of that very sharp decline, my put option suffered significantly. So I needed to make adjustments to make sure that I'm not getting more margin calls on my trading account. And then during this fast recovery, so call option moved down, fast recovery, of course, I suffered. On the call option side, I suffered. On the put option side, there's nothing I could do. I could only hope that this is going to stable, the market is going to stabilize, and I'll be able to get back to where I need to be. So exactly the same story with QQQ, and yeah, these are times where you just have to ride it out, and this is why it's very highly recommended that if you have a decent size account and the volatility, the VIX is below 20, you do want to keep about 70% of your portfolio as cash. You don't want to play with more than 30%. So you can ride these sort of situations out. I tend to be a little bit more aggressive, and yeah, that burnt me this time. Um, when the market is when the volatility is high, then you can go up to 60. Well, it's recommended that you don't use more than 50% of your account. Yeah, like I said, I tend to take a little bit greater risk, so yeah, I normally utilize more than 50% of my cash. But yeah, if you want to play it safe, don't play with more than 50% of the cash available in your account when you trade options. So let's take a look at IWM. Massive spike, stays there for 2 weeks, and then drops back to the same level. Now, as an option trader, you suffer when you see these sort of movements. But you just, like I said, you have to ride it out. Now, month of September, market stabilizes. Okay, there was a bit of a dip here, and of course, VIX jumps up because everybody is worried. All right, well, we experienced a massive correction here, a very sharp correction. Are we going to see a market collapse? Because that's always in the pipe. That's always in the. It's always a possibility. So the market didn't collapse, recovered again, and fortunately, my trading account also recovered. But I'm like 6, 7 months into my trading, and I still haven't made money. You can see that I'm still hovering around the 0%. So I'm like, oh man, I'm putting in all this effort. Of course, it's not a lot of effort, when you trade options. Unless you're trading with many millions of dollars, normally you don't need to spend more than, let's say, half an hour, max an hour a day. Quite often you just check it. Okay, market didn't do much, and that's it. It's a 5-minute thing. You just check it and done. But still, you got to put in a lot more effort than with a passive investment, let's say, in a real estate. So let's take a look what happened on SPY. Yeah, so it drops again, recovers, and you can see my call option was at the 558 mark, and then I needed to make an adjustment the following month to 570. So I was kind of hovering around the price of SPY. Now, what it did is it allowed me to collect a significant premium every single time I rolled from one month to the next. But I was always in negative, except in here. On the put side, because of what happened in the first week of August, I was really cautious. You can see I was a fair bit away from the price because I was really worried that we're gonna see something similar or even worse. So QQQ very similar, but I was able to bump up my call side from 485 to 500, while the price was still only at 490-ish. Of course, it's not a very big gap, but it was a gap, and that's what I needed. I needed to create and increase that gap as much as possible. IWM was doing funny things during these 3 months. Up, down, up. Big movements. These are big movements. You can see that I kept my put position pretty much stable for 2 months. And with my call position, as I rolled from one month to the other, I was able to just move it up. And I can't remember. I would have to look it up. I can't remember whether I was able to collect additional premium or I just rolled for zero additional premium just to improve my position. I can't remember because sometimes I do that. Because as you can see, it's worth for you not to make money but stay away or increase your distance from the actual price. So that's one of the things you can do as a strangle option strategy trader. So moving on to the month of October. Now this is where you can see the market is still going up. It's relatively calm. Occasionally we experience a bit of spike, but the VIX is mostly below 20, and my account is starting to show a little bit of a life in here in the second half of October. When we look at the SPY, you can see that it kind of felt like it was plateauing. I was able to finally go above the strike price. Sorry, I was finally able to go above the SPY price by rolling from 570 to 585. And the reason why I could do that is because I rolled my put position up multiple times to collect additional premium. So at this point, I was comfortable. I was comfortable. Yes, my call strike was too close to the actual price, but I was far more worried of another dip, of another correction. So I kept my put position as far from the actual price as I felt reasonable. If we look at the Qs, um, the Qs were more manageable during the month of November. They kind of stayed around the same price, like just minimal movement. So that allowed me to improve my position quite a fair bit. And IWM, I was very far from the actual prices, so there was not much for me to worry about. So by the time November hit, I was good. I was feeling comfortable. Still, if I looked at my account balance, I was not impressed. And then let's look at the month of November. Sorry, I did mention November earlier. This is the November. You can see that SPY once again started to keep increasing. Now this was during the election, I believe. So this was once again really testing my account, but I wasn't stressed. I wasn't stressed at all because I knew that look at this growth from below 500 to 600 in a matter of like 6 months. That's unheard of. That's over 20%. I knew that yes, the market can produce at times over 20% return in a given year, but it's not a sustainable growth. I believe that the long-term growth of SPY is around 9% annually. So this is not a sustainable growth. Meanwhile, as an option trader, I can produce sustainably over 20% annually. Of course, that's a great achievement, and yeah, sometimes it doesn't work out that way. If we look at QQQ also experienced further growth, but because of the healthy premium that I was able to get, I was quite comfortable. I stayed well above the price with my call option and well below on the put side. So yeah, you can see that I kept rolling up the put side, just following the trend, and every single time I collected additional premium. So my account started to grow nicely. This is the IWM. It it went through the roof. I believe I can say that, and you'll see it later on why I'm saying that. So it went over to 40 if we look back only 6 months ago, it was like 200. So once again, that's over 20%. Yeah, so that tested my call side, but I was fine. I was not stressed about it at all. So when you see things like that in the market, when you trade indexes, you should be a lot more worried on the put side than on the call side. Now let's take a look at the rest of the 365-day period. So you can see that there was a bit of a dip in the month of November, and the VIX jumped up. I believe this was exactly the week of the elections, and then since then the market sort of hovered around the same price. We'll see it on the next slide. Now the VIX also hovered around the or below 20. So this finally helped me to regain a comfortable position, mostly on my SPY, because I was fine on IWM, I was fine on QQQ, and on my SPY position I was suffering because of that increase in the price of SPY. So I was finally able to gain footing, and yeah, I am already revealing the results there. But let's move on. So this is the SPY that I mentioned to you. In the month of December, I was finally, for the first time in some time, I was able to comfortably be above the actual price, with my strike price sitting at 613, and I was well below the actual price with 570. So I was really good in here. I was comfortable, and in the month of January and February, I was able to roll my call side even further up to 635. So that was a good distance. And look how far I am with my put side at 550. So I factored in about 10% decrease in the price, and that's how I set my put side, because I'm like, okay, we're hitting all-time highs in here. At some point, after experiencing, I believe, around 23% in the year of 2024, that's how much the SPY went up. I figured that that's not sustainable. It's got to come down. So I'm being very cautious on my put side, and those who are following the stock market, you already know that in the last few days. So this, I believe, I ended this, where I took the screenshot, I believe, on the 21st of February. So since then, we just experienced a few days of down moves. So the SPY is now below 600. So you can see that my call side is even further away from the price, and my put side is still very much safe. We're just basically heading towards between those two ranges. Between those two strike prices. With the QQQ, similar situation. QQQ since then came down to about 515, I believe, as of today, which is 25th of February. So yeah, so I was fine in here. I'm far on both sides, and that's exactly what you want to achieve when you trade strangles. IWM, I was never worried about IWM. It is starting to get a little bit close to my put side, but in a few days or potentially tomorrow, I'll be rolling my positions to the month of April. I'm currently in the month of March, because I tend to roll about 3 weeks before expiration, and there's plenty of reasons and explanations for why I'm doing that. I'm not going into more detail on that. So here is the results of me selling my property, sacrificing a passive income, an okay passive income, for trading stock options and look at the results. I came in as winner at 28.5%. QQQ came in at 22.6% and SPY came in at 21.4%. Now, a couple of things I need to mention about this. One, that 28.5%, that's massive. Is that sustainable? It can be achieved. I would not encourage you to aim for 28% every single year, because then you're going to start taking bigger risks. I think you should be aiming for 15% or even 12% annually, and if you have great years, fantastic. But I reckon, and trust me, I lost a lot of money as an option trader in my early years. Since then, I am far more cautious. I trade much less, and I mostly trade indexes, QQQ, SPY, IWM, and because yeah, I do have some position. I have been stuck with some individual stocks like AMD, Intel. Yeah, those have been Nike. Yeah, those have been strangling me, if I can put it that way. Not exactly great, but that's why if you want to create sustainable, easygoing, comfortable growth, then focus on the indexes and try to stay away from the price as much as possible. My rule of thumb is around 15 delta on the call side and around 10 delta, 10, 12 delta on the put side. And of course, it depends on the where I feel the market is heading. This is not a hardcore rule, but it's just a general feel that I have for where I want to put my or place my strikes. And another thing to note is QQQ and SPY. So these 20+% returns, they are not sustainable. They are not going to produce those returns. So, like I said, SPY has an average of, I believe, around 9% return annually, long term. So if you can generate, let's say, 20% and SPY generates 9%, you're beating the market significantly. So, don't take too much risk trying to aim for 30% or even more, because you can get hurt big time. Try to aim for much less, and try to just, if once you have the consistency of consistently winning with a strategy that doesn't consume your life, and you can sleep comfortably at night, then you'll be just fine. So, would I encourage everybody to sell their property and start trading options? In the last, so since I have done this, my trading account performed significantly better than if I kept my property. It's not even comparable. Was it worth it? For me, yes, because I'm comfortable trading options. I've been trading options for a long time. Would this be a strategy for everybody? No, 100% not. And why do I say that? It's because majority of the people don't have the necessary discipline to trade options the way they should be traded. They, once they get a bit of an understanding of how it works and how much money you could make, then they get carried away, and that's when they lose a lot of money. And think about how much time people have to, in the Western world, how much time you have to work, how many years of sweat and tears go into paying off your mortgage. That's significant. Many people, they never in their life pay off their mortgages. So would I encourage anybody to just, put, let's say, 20, 25, 30 years of hard work, put it onto the stock market? an absolute no, 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 no. So yes, this was a great experience for me. I wanted to do it for myself. I wanted to do it for you guys so you can see the comparison. You can take the learnings from my mistakes and take learnings from my winning. Uh, and if you have, if your life is not dependent on, let's say, income from your passive property, investment property, or you've got a comfortable living and you can afford to trade options on the side, and and you and you can understand the basic concepts of options trading, then yes, this is fantastic. This is great. It's you can generate significant returns. Um, but for the majority of the people, I would not recommend it. It's too risky, and trust me, most people don't have the patience, don't have the nerves to trade options. Having said that, I hope you I hope you found this useful. I hope you enjoyed this video. I hope you found my analysis useful. And yes, if you're trading options, fantastic. Go for it. Do it wisely. Do it carefully. And the less you trade, I know there's plenty of people out there who are promoting that trade often, trade small. I I'm not that kind of person. I have been making a lot more money by trading much less and focusing on indexes, and that allows me to sleep well at night. I don't need to worry about earnings. I don't need to worry about um, takeovers, mergers, all those things that companies can suffer from or win from. So happy trading, and if you are an investor of a property, then yeah, just do it wisely. I mean, I can talk about property, and I will talk about property on some other videos. Uh, there's a lot to talk about it, but I am a property developer, not necessarily a passive investor in properties. So yeah, I'll talk about it on another video. And once again, please go ahead and check out my books. Trust me, the feedback is great so far. Those who have read it, they found it really, really beneficial, really enjoyable to read. And yeah, if you're not a reader, just grab it for somebody you love, and who you know that they would read it. Trust me, they will get great value out of it. And yeah, if you're not a reader, you should be a reader. That's the bottom line. Thank you for watching. Have a great rest of your day.